So I think what you're going to start seeing this year is you're going to start seeing in the European Union, in China, and here in the United States, ways to integrate the economy a little bit different, and that's gonna change the way that we think about employment. That's gonna be change the way that we think about progress and productivity. So we're kind of in the midst of I wouldn't say like a new industrial revolution type thing, but we're in the midst of a major change. And I think when you speak about it mathematically, every 25 years, we're in 2025, 2026, it makes sense that every quarter century something major happens and we're in the midst of it.
Hello, ladies and gentlemen, and welcome to our Risk Management Show podcast, where we explore critical trends and strategies shaping risk, security, and leadership today. I'm your host, Boris Agranovich, founder and CEO at Global Risk Community, and our guest today is Juan Perez, is a Senior Director of Trading at Monex USA, which is recognized repeatedly as a leading forecaster by Bloomberg. So, Juan, welcome to our Risk Management Show podcast today.
Thank you so much for having me, Boris.
Absolutely, it's my pleasure. So, Juan, I believe we will have a very thoughtful conversation on the topic of managing Forex risk in an era of tariffs, volatility, and policy divergence. But before that, Juan, could you tell us a short story about yourself, your career path, and what brought you to where you are right now, and what you guys at Monex USA are up to these days?
Well, so Monex USA is a multi-global financial company that focuses on foreign exchange and payments. And we are North American, but we're also located in Europe and in Singapore. I've been at Monex USA for what is now entering my 17th year. I started back in 2009 and, obviously started in sales. The company was called Tempest Incorporated. It got taken over by Monex in 2011. And ever since then, we have become a much bigger company because of FX payments. So now we are Monex Global. In my experience really is all here at this company. So I've seen it grow from where it was to where it is today. So for 17 years, I've done everything from sales to also working very closely with operations, and at the same time handling the trading desk for the past 10 years. And currently I am a senior director of the team. My background is in economics. And I have an understanding of Latin America, having been born and raised there since I was a kid. But I've been in the United States for over 26 years. I have a global perspective and also a very American one just from my education here in the U.S.
Fantastic, yeah. So Latin America is now in the news, so it's very interesting how it's all
I think that's why I'm here.
Are you also from Venezuela or not?
No, sir. I'm actually I was originally born in Colombia.
Colombia. Oh,
So I'm
I've been
familiar
there.
with the situation and certainly understand the history and the repercussions that can come from
Yeah,
intervention down there.
yeah, beautiful country. I've been to Colombia several times, Bogota, Medellin, also this coffee region, fantastic. Yeah, a good
The coffee
experience.
region is where my family and where I go. So when I go to Colombia, if you've been to the coffee axis south of Medellin, because Medellin is the popular spot, but south of Medellin is where the coffee comes from. So that's
Yeah,
usually that's my area. That's actually my area of expertise.
coffee. Yeah, I remember. What are the major towns? Remind me.
Well, so in the coffee axis, what you want to cover is the three cities: Manizales, which is a
Manizales.
very
Yeah, I've been there.
San
Manizales.
Francisco type hill,
Yeah,
very steep, very beautiful. Then there's Pereira, which is where my family
Pereira
is.
also. Yeah,
That's a city that never sleeps. It's a lot of fun at night
yeah.
and throughout the day. And then there's Armenia. Armenia
Armenia.
is very important because after Cartagena, Armenia is the second most visited city because of the National Coffee Park. And that's where you see a lot of the picturesque, the pictures and videos of like horse riding and all of that. So
Yeah,
it's a very,
yeah.
very nice area.
Oh, fantastic. We have been there. I remember myself. Pereira and Mantuzana, yeah, Manizana, yeah. Okay, let's go back to our topic. So about tariffs, politics, and forex volatility. So U.S. tariff negotiations have reintroduced uncertainty into global markets. From your perspective, how are tariffs and political dynamics reshaping foreign exchange markets right now?
Well, the main thing to talk about tariffs is we have to understand that what what this administration is doing is definitely a change from the norm. And in defining that a little bit, the status quo was that globalization was, this idea of making sure that globally we're all interconnected, that there's comparative advantages. If you're able to do this, you should focus on that. Meanwhile, trade with me. But the very globalized system and the very idea of free trade or fair trade has been scrutinized now more than ever before. So for decades, we have become very accustomed to customers globally having all kinds of options, but there are repercussions to having such a world. And what you're running into finally with globalization is you're starting to realize that the biggest enemy of globalization as a concept and in its execution is actually nations. It's actually countries because national sovereignty, national interests, national regulations will typically oversee the desire for global connectivity. So, what is ultimately happening, and you saw it in 2025, is you have this globalized in financial system that is truly based on the idea that you have to have faith in the United States dollar. And the US dollar, of course, being backed by the most respected central bank, the Federal Reserve, and of course, an economy that seems to be growing and innovating often. So those things all together are starting to be questioned right now, and that's why it reflected in the weakening of the U.S. dollar. So the U.S. dollar in the first 6 months of 2025 had the weakest 6 month run ever. What do I mean by that? In 1973, that's when the dollar index was created and invented in order to track it next to a basket of currencies. And remember that this comes from a time when there were Portuguese escudos and Spanish pesetas, French mark. So now that we have a world that is a little bit, more easily to comprehend, you now do also have alternatives. Is the European Union something to believe in? Is BRICS something to believe in when it comes to the major raw material countries such as China, South Africa, Russia, Brazil coming together? So you're finally starting to see major challenges and real physical challenges to the dominance of the US dollar based financial system. So you had the worst 6 month run since 1973. And then in the second half of the year, you had markets trying to cope with many, many changes that were done originally unilaterally. And then as the year progressed, these tariffs, these things were starting to get negotiated and exemptions were starting to be given away. So what happened in the second half of the year is actually a very small, very, very little recovery for the US dollar of about 1.1% overall, according to the Bloomberg Dollar Spot Index. So what that means is we're all very confused. In the first 6 months of the year, there was the belief that we were going to have very, very pro-growth, pro-business policies, and that would include the Federal Reserve cutting into interest rates. However, the economic evidence does not show that we are in a situation other than stagflation, which is maybe low growth and stubborn inflation. We're not in recessionary pressures. So there's no reason to think that the Federal Reserve needs to be stimulus driven. That's in comparison to the rest of the world that has gotten ahead of us and has been more stimulating and more driven towards cutting interest rates. So overall, tariffs and the unilateral moves by the United States and then the subsequent negotiation has created a lot of confusion because there is no long-term guarantees anymore that allow you to do forecasting or predict markets, which is why that's being reflected now in a highly volatile US dollar that had the worst yearly performance since 2017. So it all seems like it's a lot happening at the same time, but it really boils down to a challenge to globalization from the very center core of that system, which is the United States, and that's why you're seeing the U.S. dollar lose so much ground against other currencies.
Yeah, great analysis. So you mentioned that dollar has been kind of fallen against major currencies. Also, the gold has been on the very upward trajectory last year. It's kind of kind of insurance premium for the kind of best asset, right? Because last time it was U.S. Treasury. Now central banks want to take more gold instead of dollars and bonds of the United States. So how
So,
this
an interesting thing that you just said, and I'll throw this statistic for the listeners. When it comes to US dollar and what it represents in the total global reserves, back in 1999, it was around 72, 75% of global reserves. At the moment, we are at 57. So there is such a thing as a change in mentality and the execution of how these central banks are looking at the dollar. That instead of speculating over how it will behave, they're already taking care of hedging by taking the one thing that historically has always been admired and respected by human beings, gold. So when it comes to the safe haven assets, the safe haven asset appeal of the United States has always been there for what we just mentioned. It is the core center of the financial system after World War II. So it makes sense to always hold US dollars. You're going to be invoiced in US dollars. You're going to have to borrow in US dollars. There's always an appetite for US dollars. But if all of a sudden it's not seen as a safe haven asset or the most reliable thing that you can have, then you start looking for alternatives. And it's interesting how gold has gone back to being a very, very appreciated asset.
Yeah, yeah. So, what do you think treasuries should work on this? Because many treasuries still rely on the relatively passive hedging approaches. And why is now the right time to revisit those strategies? And how can overlay hedging help companies better manage uncertainty?
The thing is this, so, in the world of foreign exchange, in the world that we participate in, um, I'll explain simply, but there's two P's, right? So most of our clients and treasurers, what they're looking for is they're trying to protect themselves, right? The first P is protection. How do I protect myself from the wilderness and the risk that exists within the FX market? So, through that, what you do is you buy on the spot because you have to make payments that are due the next day or 2 days. So at that point, you're just at the mercy of what that day the market tells you, right? But the way to do it is you have to be able to do the math and see what you can handle. So you need to do forward contract hedging. You need to look at balance sheet hedging. You need to look at what is the current rate of exchange, but more importantly, mathematically, what is the exchange rate that matters to you the most? So you have to do an equation and say, what is the take profit? So the take profit would be a desirable strike price. What would be an ideal rate of exchange that is, hey, that if it improves and it's in my favor, I would like to have this company buy automatically for me. Or the other way, which is the more important part, is you look at your stop loss. You say, hey, what is the worst scenario? What is the one currency rate that if it reaches that level, I'm not going to be in a good situation? So the stop loss, take profit is something that we have seen people use tremendously because short-term and long-term forecasting have been hurt. And remember, we just came from the longest government shutdown in US history, which hurt visibility, transparency, and analysis for 7 to 8 weeks. And now people are still struggling. So, because it's so hard to really pinpoint where things are going, it is important to know and prepare yourself for what is mathematically where I don't want, where is my limit? And you can set that with us and then know that automatically you're going to get something that's going to be either favorable or you're going to take a rate of exchange that is the one that you can handle and you're not going to run any further risk. So that's protection. The other P, and we're seeing this because companies that have really good cash management, but more importantly, that they're able to take a little bit more risk. That's called participation. So participating within the FX market means that you do have to make payments, you do have needs, you do have things scheduled, but you're trying to see if based on a structured and based on an option, there is a way for you to get some premium, and there is a way for you to take advantage and be given a rate of exchange down the line that is better if certain terms hit. This kind of is a little bit sort of like equivalent to when you do a multiple leg parlay, right? So protection, very important. It's very hard right now because treasurers tend to like models and reliable precedent and patterns. But at the moment, we're in the midst of major transition and chaos. So we have to really roll with the punches. But if you're able to take on the volatility and you have the cash management, then one of the things that you can do is do options and look at structures and see how you can perhaps get benefit from that.
Mhm. All right. So you described option is important and to take a volatility kind of in the attention and the mathematics and all this. I used to be also risk management manager in the bank. I know this kind of formulas, and although I have not been a trader myself, but I kind of supervised traders. So Forex is one of the trickiest one when we had back when we had some hundreds currencies like Deutsche Bank, Deutsche Mark and Netherlands Gulden. It was not like this time. But what practical actions can businesses take today to reduce their Forex exposure and protect or even improve margins for their P&L?
Well, when it comes to P&L, I know obviously one of the major difficult things right now is pricing. So when it comes to your pricing equation, obviously if you're in international business, the main thing that you have to concentrate on is what is your net landing cost. So the net landed cost is when you take into account everything from duties to the specifics of that country, and then you add what has been introduced by the United States, which is tariffs, right? And the tariff schedule has been very idiosyncratic and very particular. So it has created tremendous difficulty. What I would say more than ever before, and this is really the salesperson in me talking, is you really have to have very serious conversations with your overseas vendors. More importantly, what one of the trends that we have seen recently is, so for example, a lot of these emerging markets, or let's say a lot of companies like ours that maybe needed to send euro to Europe, but over to the Philippines, they would not send Philippine peso, right? It was not something that they understood, or it didn't seem like there was an interest from people in the Philippines to receive Philippine peso as payment. Say, just send me American dollar. That's changed dramatically. More than ever before, I've had to pay attention to rates of exchange when it comes to not only just emerging market currencies, but pay attention to frontier. Frontier currencies, I'll give you examples. Vietnamese dong falls in the frontier, PKR, Pakistani rupee. Remember that India has already become very well known for being a hub for manufacturing and even some services, especially anything that's English driven. But some of that has, because of the success, some of that has actually dipped over to Pakistan. And again, not the easiest country to deal with, but PKR is one of the solutions that we've now added for treasuries, because they were like, hey, we have to send money to this country, for example, Ugandan shilling. I wouldn't have imagined in my career studying economics that I was going to need to understand Uganda. But these countries, and I would say if you want to look at it from a hemispheric way, countries in the southern hemisphere and certainly the manufacturing hub in Southeast Asia, typically and until 2025, they were more than elated to receive US dollar payments. Now they want to know and they want to receive in their own local, which is why a company like ours becomes imperative in how you plan and do this, because there is such a way that and there is such a thing that US dollar payments are not only not convenient and not desirable, but then that you end up having an advantage by actually doing it in the local currency of the vendors that is asking you for it. So I think more than ever before, instead of just looking at your margins of profit, and of course you want to do as much Excel math as possible, what you really do want to comprehend is if they were asking for a particular currency before and they're not asking for it now, why is that? And if you weren't aware before of all of these other frontier currencies that you can actually very smoothly and easily make payments and transfers in, this is the time to start looking into the global world. So earlier I said, globalization has kind of a bit of friction with national interests. But right now, no matter what, when it comes to payments, everybody wants to get paid. And one thing that has changed is the mentality of getting paid only in US dollars or primarily in US dollars. So now all of these other currencies are starting to prop up as important.
All right. So how about kind of crypto development? Because I saw that stable coins kind of become very important in this area.
Yeah, so again, and I'm going to be very, very transparent here. For me, as a trader that is the currency is backed by governments, central banks, interest rate differentials. That's my world. Crypto isn't something that I actively trade, and it's not part of my daily professional task. But it is something that now, as a company, we're starting to entertain and have conversations with clients and prospects about how stable coins can make things easier. I know that when it comes to the SWIFT system, right? And for those out there that are familiar, obviously this is the society of wire payments and how things are delivered. But we're running into more challenges now more than ever before, which is China wants to have faster and quicker liquidity, and it wants to internationalize that. So you're actually seeing stable coins in a digital platform. I think it's going to call, man, I forget the name at the moment, but it might be M Bridge or something like that, but or M Pay. But the idea is that it is kind of like that Chinese organized SWIFT system for Thailand, for these other big countries. Now, the reason for that is because in terms of you're very briefly touching on it, but there's so much to talk about when it comes to this because there is criticism against the United States a little bit that we've been a little bit too late on jumping on the stable coin and digitalization of USR, and we've kind of focused more on like giving a lot of now regulatory leeway to the rare stuff and again stuff that's not necessarily backed by stable coins or pegged to a central bank. So for us, it's a learning moment, but it is something that is finally being very much included in the conversation of FX solutions. And the main reason for that is because the biggest demand out there is how soon can I receive the money? How soon can I get confirmation of delivery? And that's because right now, Boris, if I wanted to Venmo you something, you would have the money right away. And if in one of the craziest things, again, full transparency here, I'm speaking as Juan Perez as a person, I have found it amazing that we live in an age where if you use Gemini wallet or any other type of Bitcoin or crypto thing, you literally switch these things from whatever it is to a dollar, and it's unbelievable. So we're starting to become more aware of this, but in our world, right, because we are in the foreign exchange central bank dictated world SWIFT system, we are not trying to deviate and jump into other things, and typically we are not supportive, and we are not typically working together with entities that are taking a lot of crypto risk. But one of the things that we're becoming more comfortable with is hearing about Tether and USD and all of these stable coins, because these things are actually more manageable. And again, regulatory changes have made it so that it's a little bit less of a risk for companies like us.
Fantastic. So, Juan, let's summarize our interview for someone who is listening and would like to walk away with one or two major takeaways. What would it be?
Well, so one major takeaway is we have to really, really understand that we're living in a crucial moment for the dominance and superiority of the U.S. dollar. I'm 39 years old. I grew up in a world that has been very much managed and dictated by U.S. dollar value against everything else. Now more than ever, if you're America-based, if you're United States-based, if you have become accustomed to paying people in U.S. dollars, that is starting to change. So you may want to contact a company like ours to guide you and to work together with you. That's a major takeaway. On the other part is like, as a major theme, I think because of technology, I feel that, governments need to at some point meet the technological advancement and start helping people out. So I think what you're going to start seeing this year is you're going to start seeing in the European Union, in China, and here in the United States, ways to integrate the economy a little bit different, and that's gonna change the way that we think about employment. That's gonna be change the way that we think about progress and productivity. So we're kind of in the midst of I wouldn't say like a new industrial revolution type thing, but we're in the midst of a major change. And I think when you speak about it mathematically, every 25 years, we're in 2025, 2026. It makes sense that every quarter century something major happens, and we're in the midst of it.
Yeah, fantastic. Thanks again. It was very kind of very interesting for me as a professional for risk management. Also, kind of for political, geopolitical kind of person who kind of almost watches always watches the news, so to discuss with you all these topics, and I wish you a great success with you and to you and your company, and hope we will cooperate in the future on other topics.
Well, I really appreciate you being on your podcast, Boris. And again, Monex USA, we're available for any questions. I'm usually one of the front people on the website that, if you have any questions about what's going on, we're not unreachable. We want to hear from you. So absolutely, we're very welcoming. And I think during a time when, again, there's so much transition, there's so much uncertainty, we're just another arrow in your quiver.